Okay.
Awesome. Well, thank you again, Brittany, for joining us. For people who don't know who Brittany is, she is an incredible financial professional. She has over 20 years of experience in sales and finance. She's scaled businesses in several different industries, you guys, including the health and medical field, construction, real estate, finance, banking. I mean, the list goes on. And now she owns her own company building business credit for small to medium-sized companies all over the US. Her experience lies in business startup, growth, scaling, you guys, real estate agents, real estate teams, creative financial strategies, sales, marketing, all things that we're experiencing now.
Yes.
If you are a current broker owner or own a small or run or a founder of a real estate team, she has extensive knowledge in personal and business credit, guerrilla marketing, large scale sales and sales team training. And her true passion really helps, or it really lies in helping others to succeed and reach their business goals. And that's why we've asked her to come on and speak with us today, because her values and her mission really aligns with what we are doing here. So thank you so much for joining us, Brittany.
Yeah, my pleasure. So, welcome everyone. After the recent Hurricane Ian events, I'm sure several of you all were affected by that. So, my prayers are with you and your families. And I'm really excited today because I feel like this presentation takes on a much deeper meaning, even post that natural disaster. Not to mention, it was starting to take on a deeper meaning just with the way the economy was going, with us being in a formal, what is known as a formal recession as of July. So there's been a lot of speculation around that. Were we in a recession? Were we not? It wasn't really announced on the media. So according to the actual stock market and the different indexes and things like that, we started into a formal recession in July, which starts to drastically affect real estate business altogether. So this training today is really going to teach you some of the very important pieces and distinctions between business credit and personal credit, and how you can utilize it to keep yourself in business when you don't have those commission checks rolling in, or when you've got people, leaving your team because they're trying to go to something else that's more stable. So learning how to transition to plan B when the economy and or a natural disaster are drastically affecting your industry is kind of a primary need for being successful. And it doesn't matter what business you're in. You have to have a plan B for how to pivot when things aren't going beautifully. And that's what I'm here to kind of teach you, a distinction between personal credit and business credit, and get you guys into a really safe place that's good for your families and really for the longevity of your personal businesses. So a huge thank you to Jay Galt Finance Suite. That is who I've gathered most of my information from, most of my training from when it comes to the business credit side, because business credit is kind of like the unicorn of credit out there. And let me see if this is gonna here. So we have about 42,000 members that have received over $1 billion in business credit, meaning they weren't utilizing their social security number at all, which is a really important point. It's a sophisticated SaaS product. I kind of like to refer to it as like a monopoly game. That my clients get access to, and they work through it as a online program, and it shows their little ball moving along until they get to fully fundable business credit, and they separate their personal and their business liabilities. And then it's a technology company overall. And then I am overall a consulting practice that utilizes a lot of their technology in my business. So, so she gave a great introduction. Thank you so much, Haley. Yep, I'm also a mom. I'm a mompreneur. I have 7 children, and we have a little micro ranch here in South Florida. And this was one of my own personal quotes. Your business, even your real estate business, will shrink or expand in proportion to your ability to dream big. And I mean that very sincerely. You only will grow and you only will succeed to the extent that you allow your mind to actually grab onto success-wise. So if you're happy just paying the bills, you're just going to pay the bills. If you have a bigger goal to help other people pay their bills, then you're going to reach that goal. You have to have that really overarching goal, and you have to have the ability to dream really big to get to where you want to go. So let's just go over personal and business credit, some of the differences. So what's in a score? So your personal credit score is comprised of your social security number. It is made up of something called a FICO score, primarily to any type of lender. And then there's a newer score out called your Vantage score that we'll go into depth with a little bit more later. Then your business credit is primarily built on your EIN, which functions as the social security number for your business so that it can be its own person, really, in credit terms. You have a BIN number that is issued to you by Experian Business. You have a DUNS number that is issued to you by Dun & Bradstreet. And then you generate something called a Paydex score, which is your kind of like your overarching FICO for the business. So what are the differences between FICO and Vantage? So FICO scores range between 300 and 850. They provide an easy to read score on millions of consumers, right? It was developed by the Fair Isaac Company. It has different models. There's actually 10 different FICO scores, believe it or not. So when you're going to look at purchasing a vehicle or you're going to look at purchasing a house, each different credit bureau, so Experian, Equifax, and TransUnion, utilize different combinations of the 10 FICO scores to come up with a score for when you want to go buy a car. They have literally an auto FICO for you, and it's comprised of like of FICO 1 and FICO 3, just to give an example. So same thing happens for your mortgage. You have a mortgage FICO score, and each different bureau decides what of the 10 FICO scores reporting they're going to utilize to make up your mortgage FICO for their individual bureau. Okay, this is very important because most people think that they have a single FICO score, and it's like my credit score is a 780. Well, for what? Right? Because if you actually knew what the actual lenders were looking at when they went to pull your credit, you would be absolutely flabbergasted at the differences in the scores. They're tremendous, really. So then we have something called Vantage score, which is a combination of all 10 FICOs added together and divided by 10, literally. So that's basically, when you hear the word Vantage, I want you to think of the word, I totally just lost my brain for half a second though, average. Okay, so Vantage, average. It's your average score. It means really nothing because it could vary anywhere from 30 to 50 points, depending on what kind of lending product you're trying to apply for. So if you're trying to apply for credit cards, you have a different FICO score than you do if you're trying to apply for a personal loan. And your Vantage score is going to look like it's just this combo of all those FICOs put together. And it might say that you have a 700, but your mortgage FICO might be an 850. That's very important to understand. So where do we get the Vantage score from? Everybody's favorite, Credit Karma. That is a Vantage score. That is not a FICO score. Okay, so I just want to make that distinction to start. So here's your Credit Karma, right? I'm sure you guys have heard of it. And they always show their TransUnion and their Equifax. Those are still considered average scores. So when Equifax has all of the different FICOs that they utilize for their products, they add those up together and they divide it. And that's your Vantage score with Equifax. It's not your actual FICO score with Equifax, okay? So annualcreditreport.com, this is your best friend. This is where you can go, and right now, and actually since COVID, you can go there and you can pull your personal credit without damaging it for free every single week if you want. so that you can really keep on top of it and monitor it. And you can pull a report for Equifax, Experian, and TransUnion. You can download the report, you can comb over it, all kinds of stuff. It's a great thing. So personal credit scoring, just to review, right? So your FICO score can range from 350 to 850. They do say 300. It's kind of gone up since then. Auto scores are now reaching up to 900 because of the new FICO 10 score. And then this is an example of exactly how they mix all of the different FICOs together. So you'll notice Experian is utilizing the FICO Auto Score 8 and the FICO Auto Score 2 for what the score they'll give you if you wanted to go get a car loan. Okay, so this is kind of like just a good example of how they're utilizing multiple different scores. And right now, the most widely used version of the FICO score is FICO 8, but it does go all the way to FICO 10. So when we're talking about FICO scores, it's important to understand that each different version has different requirements. So they've got different boxes that they're looking at about you as a human. And they get all of that information from a certain Consumer Reporting Bureau. It has nothing to do with actual credit. It just reports on all the information that you've ever put into the computer or that you've ever put on any loan application that any bank has received about you, anything. It's like a master reporting, consumer reporting agency, and it's called LexisNexis. So business scoring, this is where we're going to create a distinction and your mind is going to be blown. Okay, so business credit scoring. So you have a 0 to 100 score when it comes to Dun & Bradstreet or Business Experian. The newest player to the game for business credit is Business Equifax. And Business Equifax ranges from anywhere from 0 to 580 being the best, which is kind of like a random number. They're really just piggybacking off of Dun & Bradstreet and Business Experian at the moment. And then there are several other, as in 5 other very small business credit bureau reporting agencies that have kind of developed on their own, and they're working with LexisNexis, and they work with certain lenders that they've decided to, represent specifically, where maybe that lender is for commercial property where your office is going to be housed, and that lender they want to know certain things about you. So one of those little business credit score bureaus will actually put together like a package of the information they would provide to that lender on each consumer that applies. So that way it's kind of tailored to that type of lender. And so just to bring up another point, it's very important to understand that all business credit products are very specific. They have some blanket, lines of credit things, but true business credit products are very specific. It's a gas card. It's a loan for commercial property where your office will be housed. It's a business auto loan specifically for heavy duty equipment. I mean, they're very specific lending points in there. So just to give you an example on how do I generate a perfect business credit score. So in order to generate a perfect business credit score, you have to pay at minimum, and this one shows like payment comes on terms at a score of 80 to 100 being the best score. Really, the truth of that is you have to pay 2 weeks early as a standard on any business credit product. So in personal credit land, where you might have that nice grace period of 30 days before you'd actually get like a late and it could harm your credit will be harmed in business credit land if you're not paying early. So a lot of people don't know that, and they set something up on auto pay for their Verizon, business phone number. And auto pay will actually shoot you in the foot because you'll never generate a really good business credit score doing that because you're paying on time and not early. So Something else I like to educate all my clients on is when it comes to personal credit, it's always the best case scenario for you to pay those products 1 week early. That way, when the credit bureau comes in to actually check your usage or your balance on a loan or any of those things, it's already showing the payment processed and reflected, which means the balance is always appearing to go down, which is a huge positive. So next thing, so the advantages, right? So we'll go over the advantages of personal and business credit, and we'll just keep making that distinction. So for personal credit, paying on time or up to 29 days late is okay. You're not really going to harm yourself. You can do that and still have great credit. Majority of lenders are going to report. Auto lenders, mortgage lenders, credit cards, they're all, the store cards you have, majority, like 99% of those actually report positive business or positive personal credit back to those 3 bureaus. A good score will actually drop your auto insurance. If you didn't know that, a good personal credit score drastically affects your auto insurance rates. And it's just a real thing. And at 18, you magically have a credit score, even though you might not have done anything to get that, because something with medical is reported because your mom had to put your social down on that, or, there's a billion different things that could happen, but everybody kind of already has a score generated by 18. Whereas with business credit, that's not at all how it works. So the advantages of business credit that are kind of different from personal, you could have 100% usage on a business credit card or a line of credit or really anything, a retail card with business credit, and it'll never drop your score for business credit, because they expect a business to really use their credit hard and pay it off, and use their credit hard and pay it off. Paying early is the advantage there. So paying early is really what's going to generate a good score for you in business credit land. You can also have as many lines as you want. So in personal credit land, if you have too many lines of credit or too much available credit or too many credit cards, you're going to damage your score because you look high risk. In business credit, they expect you to have as many lines as you need to have because they're so specific and individualized that nothing really touches each other. So if you have a gas card and then you have an office supply card and then you have a card for your electric supply company, and there's all kinds of different things. So Walmart, as a point of reference, has over 850 different lines of credit, and it does not affect their credit score whatsoever. They also carry about $4 billion. So that's with a B. They carry about $4 billion in debt. And they do it purposefully, because that way the business is always carrying the liability and their cash is available for what ifs, right? So it's not because they can't pay their debts, they're carrying it on purpose. It's called leveraging debt, and that's a good thing. So in business credit, your good score will actually drop all of your business insurance expenses. So for real estate agents and for brokers out there who are listening, you are probably paying through the roof if you're being, a really good agent and or broker, and you have that commercial insurance on your vehicle just in case you take a client to a property. That commercial insurance is astronomical, and it's going to remain astronomical if you do not build some business credit for yourself and or for your team as a whole. So that's something you want to think about. You can buy that cost down. It can lower tremendously and be a lot more valuable to you if you build a business credit score. So the other issue that's amazing with business credit is that you will get 10 to 100 times the credit limits that any personal product could ever get you. So if you're utilizing your personal credit card with American Express and your limit is 20,000 or 30,000, let's say, American Express and business credit world, their corporate awesome card starts at $100,000 limit, which is doing what for our real estate agents and brokers? Amazing. Think of how much you could spend for your marketing budget and just throw it on your credit card, because it's going to pay you back over the next year. Think of what you could spend for hiring for your team. Tremendous. Or you could do a $30,000 campaign to hire hard, and get more agents and blow up your business because you utilize that credit on your corporate American Express. And then it'll pay off because all those agents are going to come in and work their butts off, right? So
Brittany, really quick question on that, if you don't mind.
Yeah.
So I work with a lot of agents that are also starting to invest in real estate more, and there's going to be a season of that coming up. And one of the biggest challenges that really great investors have from a credit perspective is that they don't want to leverage a lot of their own money to use to like flip homes, for an example.
Sure.
There's the idea of, maybe only having to put $20,000 or $25,000 worth of work into a property to be able to then rent it out, for an example. So you're not necessarily flipping and getting it right back. What's really interesting is that when they have smaller credit lines like this, like 30,000 with American Express, which people like, that's the maximum on like a personal card, to your point, even if you're really good.
Right.
They're maxing out credit cards and then paying them back at a certain time, but their credit is tanking. And what they're finding is that every time they do that, their credit doesn't bounce back as high as it used to be. So it's like going down and down and down. And the reality is they're using the credit for good and they're paying it back and they're doing all the right things, but because they're using it in a way that they're using it, it's creating problems. So if I'm hearing you correctly, having 100,000 and having it on a business could really help to avoid what some of these investors are finding on their personal credit. Is that right?
Oh yeah, absolutely. Hugely so. So for one, they don't care if you use $99,999 on it. It's not going to drop your business credit score, and it will not report over to your personal score. That's massive, right? So your personal credit can look completely available and freed up while you use the heck out of the business credit to accomplish everything you need to do business wise. It's built and designed to be used in a hardcore fashion, just like a business needs to. I got to buy stuff, then I'll sell it, and then I'll make money. And then I got to buy stuff, sell it, make money. I mean, that's just the way it's functions. So yes, you're 100% correct on that. Yes. So this is huge for not only for your teams and for the agents, and building business credit is huge for them, but it's huge for them understanding how to communicate that to their clients so that their investor clients are getting the best advice possible so that they can buy and sell more houses through your agents. It's perfect. Yeah. So some other things. It is very easy to correct a business credit issue because they're very forgiving. Like, oh, I got so busy. We totally just missed that bill. I'm so sorry. Here's my letter of explanation. Our business increased by 30% this month. It was unexpected, whatever. They're very forgiving about it. Whereas personal credit marks like stay on there as a black mark for the rest of forever. And the more they regulate personal credit, the more it is impossible to remove anything from your credit. And anybody who tells you that they can do that is full of squash. Okay. So it used to be possible to really remove stuff off your credit. Now it is almost impossible to do that, especially with certain, lenders or with certain lending products. So what's the bad? What are the disadvantages? So personal credit has some disadvantages of once you go over 30% usage, your score will drop 30 to 50 points. So to Carrie's point, if you're utilizing that personal credit card and you've got a $20,000, $25,000, $30,000 limit, which is where they all max out on anything using personal credit, you are going to drastically drop your score. So what happens with the reporting bureaus, to Carrie's point also, is that they mark you as, oh my goodness, this person just had to use full credit on this. Yes, they paid it down, but what happened? Something happened. So they see that as high risk behavior. And they keep that in mind, and they won't let you go above certain thresholds because they start to see you as a potential high risk user, and they want to kind of like control you and keep you down. Okay. That doesn't happen over in business credit world at all. So that's a really important thing. So the number of credit lines you have can actually affect you negatively for personal credit. If you have too much available credit, you look risky, like you could go into debt tremendously at any given moment, right? Or if you're utilizing on several different things, they may see that as kind of like disorganized haywire, and you just go around willy-nilly opening all these retail store cards, and you might forget something, and you are considered higher risk because of that. So low credit limits, personal credit products, historically do not have anywhere as high credit limits as your business credit products. So like that 20, 25, 30, it sounds like a lot, but not when you're running a business off of it. Then it affects your ability to accomplish any personal goals, right? Oops, sorry guys. So if you are utilizing your personal credit to run your business or your real estate expenses with all your closing gifts, or doing marketing campaigns so that you can farm that neighborhood or whatever's going on, you are utilizing your personal credit and it's not available when your car tanks and you have to go get a new car. And now you're like, well, I just used $10,000 to do this great direct mail campaign and my score has dropped tremendously, but now I need a new vehicle. And you're like, hey, Mr. Auto Loan guy, I promise this will be paid off by the end of the year because I'll do 5 times this, in business just off this one direct mailer. And he's like, yeah, I don't care. Your score's low. So that's all I'm looking at right now. Right. So you have to be really careful how you're utilizing your personal credit, because it has a direct relation to how far you can get on your personal goals. And it's very difficult to correct problems, which we kind of touched on recently. So the disadvantages of business credit. The only real disadvantage with business credit usage is the more term loans you have. So if you have a bunch of SBA loans or you have a bunch of 30-year at 5% loans for equipment or something like that, those term loans can actually harm your business credit score. Sorry, my dog is in my face. And then being on time or being past the due date sorry, is not a good thing either. So on time you would think would be great. It's really not though. It's they consider that you being late. And then less than 7% of business credit companies out there that you might be utilizing are actually reporting. So that's one of those things, those eye-opening pieces where everybody goes, but I have a Chase business credit card. Like it's surely reporting to business credit bureaus. No, it's not. It's actually not. I'm really sorry to tell you. It's not. And what it is doing is it's using all your personal credit. It's reporting to your personal credit, and you're not building any business credit whatsoever. And most people say, but Brittany, it's a bank business credit card. Yes, I'm very aware of that, but they don't want to pay to report back positively to the business credit bureau. So what they are doing is they will report bad credit back to them because that's free to do. But you're not gaining anything out of that Chase Bank business credit card. And it's still going to have that personal credit size limit of that 20, 25, or 30,000. And you're not going to get above that. So having no score for business credit will raise your insurance, right? We talked about that earlier. And you don't have a business credit score. I promise you, you do not have one until you've started to intentionally build it, which means that you don't just start your business, your real estate business or your team, or, or start as a sales associate, and file for your little EIN and your LLC and those things. You don't start out with a DUNS number. You have to go to DUNS and say, hey, I want a DUNS number. You have to go over to Experian Business and say, hey, I want an Experian number. And then you have to make sure that the information that they've matched you up with is correct for your business. You have to make sure it's spelled right. I was with a client today. He's an insurance broker. He owns an insurance brokerage. He had his business as DLR with all the letters together, Insurance Group. But on all of his Secretary of State and his DUNS and his Experian BIN, the actual information was D space L space R. And it sounds like, well, what's the big difference, right? It matches his EIN, the business is social. Yeah, but no, they actually won't match it up because there's so many hundreds of thousands of business names, and somebody could have DLR with the letters squished together, insurance group, as a totally separate business. So they won't match up your products. So there's quite a bit to business credit, and you have to be very intentional. So what's the real ugly part? So nobody likes to talk about the ugly part, right? So the ugly part is bankruptcy. That's the ugliest part of credit, right? It's the scariest part, the ugliest part. So on the personal bankruptcy side, if you take out a second mortgage to keep funding your business through this horrible Hurricane Ian situation, because nobody can get a home loan because nobody can get homeowners insurance right now, or the title company can't do any title transactions because nobody can do any purchases right now. And you took out that second mortgage to try and sustain the business, and now it's taking too long to still be able to maintain that second payment, you will go bankrupt personally. And most people say, but Brittany, I had an LLC or I had a corporation. Well, that's great, but you put all of your debt on your personal side. So you're going to lose everything you personally own, your house, your car, your personal belongings, your toothbrush. If it's valuable, they will come and take your toothbrush. They have no qualms about that when it comes to personal bankruptcies. Any asset that's available to cover their funds, they will come and take. If they saw you use it on Facebook and they know you've got that, side by side in your garage out there, same kind of thing. On the business bankruptcy side, they're only going to take business owned items. They won't touch your house or your car or your personal items. They just want anything that's actually in the business name. And as long as your bankruptcy was on products that were strictly business credit products and not personally guaranteed by you or utilizing your personal credit whatsoever, you'll be safe. And you can bankrupt your business in 1 week and turn around the very next week and start the same business with a slightly different name, apply for your EIN, and roll right on back to building business credit instantaneously and intentionally, and you won't skip a beat. So that's really the ultimate goal of business credit for my clients, is for them to start creating the distinction between the two and to take all of that personal liability and shift it over to business credit products that they've not personally guaranteed, and make sure that everything they're working super hard for doesn't get tied up in an issue because of something like a Hurricane Ian that wiped out their whole business, So just a really good point to make. I also like to use the example, some people like Trump, some people hate Trump. Either way, it doesn't matter. Most people talk about, how does Trump pay no taxes? Like, what is that all about? So I would like to explain that in a really short scenario. He starts businesses, he rapidly builds their business credit, he debt loads that company, and then he bankrupts it. And guess what? He gets to take it as a write-off against his other profitable companies that he actually cares about. That's how he does that, literally how he does it. And he can do that, keep doing that over and over and over again and never get in trouble for it and never have a fault for it. And yeah, it's unethical, but it's the way the laws are written that you can do it that way. So you can hate him for being smart or unethical, either one, or you can really see the use of business credit and make sure that you're utilizing it properly for your business. So business versus corporate credit. I want to make that distinction too, because so many people refer to me all of their business credit products that they're using through the bank. And I need to make that distinction. So business credit looks like a line of credit from your bank. It looks like a business credit card from the bank. It looks like your business Home Depot account. Your business gas cards that you went to the Wawa and you signed up for that. They all require personal guarantees and they all utilize your personal credit. True corporate credit products, that's what we're going to start calling it now, would be like your corporate Amex. You'd have an Ally Fleet account where you could literally buy vehicles for your corporation strictly on the business, and you have no personal ties to it whatsoever. And on average, you have 5% lower interest rates also on any of those term loans. The gas cards actually have large discounts for gas, believe it or not. It's not like some little like point system reward deal. They have a corporate Amazon account you can have, believe it or not, and you don't have to pay anything for 60 days. They have a corporate Costco, and it is not sold by Costco in the Costco store. It is sold by an outside financial institution that decided to go to Costco and offer to them that they would provide a Costco credit card for business credit specifically, and it's not going to utilize any personal credit whatsoever. Same thing with Home Depot. There's a company called Supply Works that is not Home Depot, but it has a Home Depot credit card that you can get for your business that is completely on business credit and not utilizing personal credit whatsoever. They strictly use the EIN. It has nothing to do with you as a human. They don't even care who you are. They just look at the business. So that's kind of the end of it. I had a client very graciously dub me as his business's best friend, and it's kind of stuck because I've had people kind of reiterate that. So that's my new and improved tagline. And that's all I have for you guys today. So any other questions from anybody? Anybody like confused about anything? I want to make sure nobody's confused about anything too.
Can you go back to that last slide with all the,
Oh, surely.
I wanted to get
Like
us
the very last slide?
Yeah, with the corporate and the business,
Yeah, let me see here.
right before your slide.
Yeah, let's see, from current slide. We have to go in here, do the share screen, do this, and then from current slide. It'll go. Let me scoot through my little
Oh, sorry.
my little light up word section here. Okay, guys, can you see it? You got it?
Got
Okay,
it. Thank you.
Yeah, you're welcome.
Okay, I
So-
have a question too.
Sure.
Do you want to go first? There was someone
Oh.
else.
I was just wondering, do you have a consultation? What would you charge for a consultation?
So in terms of business credit, I don't do a consultation fee because I could bet you money that you don't have any credit for it unless you've actually specifically done like the 120 things you have to do to start achieving business credit.
Mhm.
On the personal credit side, I charge a $250 fee. And that's the only fee you pay. And I do an entire plan for my clients so that we identify everything we have to address on all three of the different credit bureaus reports for you. And then a payoff plan that's a lot more strategic than either the snowball and or the, there's a couple of those different like debt relief, plans. I have a combo plan that's a lot more effective and efficient. But you pay the one-time fee and then I work with you until that's all completed. So like for one client right now, we meet once a month and we talk about what she's going to pay for that following month, exactly how she's going to pay it and how we're going to keep moving forward. And we check her scores again so that she can see that her efforts are improving things drastically and stay on track with it. Because most of the time the client isn't like real diligent about those things unless they're seeing the fruits of their labors. So, yeah.
So do you give recommendations on how to build your business credit?
Oh yeah, I walk you through the entire process.
Okay.
From start to finish, from ground zero all the way up to we've now built like a group of products and we're now going to buy out all of those personal liabilities and shift them over to business credit. Yeah.
Okay, so just to get this straight, so if I like opened a Chase business card for my business years ago, that's personally liable to me?
Oh, yeah, you're responsible for that. And if you can't pay your bill next month, it's going to wreck your personal credit.
Got it. Okay. And I do understand that. But also the insurance aspect, like no one's ever talked to me about that. Like just
Yeah.
putting that card on a 2-week early will lower my insurance rates.
Absolutely. Well, what will help your insurance rates is building a business credit score. And ideally it has to be a good business credit score, not a bad one, right? So
Right.
having no score is the same difference as having a bad score. If you want to achieve dropping those insurance rates, you have to build a positive, a good, solid business credit score. But yes, it will drastically decrease your insurance rates.
So you said there's like 120 things to do. So this sounds like a huge process to save a few bucks on insurance.
Yeah. So insurance is just like one like minor benefit. So you're not doing it for that. You're doing it so that you free up your personal credit and everything you've worked for, you're not personally liable for, right? And so that you keep the separation of the business and you as a human who has their own life outside of business, right? So it's kind of like I like to use the the example of, if you have a 30-year-old kid, right? It's cool if he comes over and he has like dinner once a week. That part's cool, but you don't really want to, guarantee his credit cards or be the signer on his mortgage for him, right? Because what if he doesn't do so well, or what if something happens, or who knows, right? You want him to stand on his own 2 feet credit wise. That's the goal. It's the same thing with your business. Your business is that 30-year-old kid and they need to stand on their own 2 feet credit wise and not be utilizing mommy and daddy's credit over here and harming your credit usage.
Okay. And so does your website like walk you through steps or things you do, or do I have to do like a coaching? How does that work?
Yeah. So what I do is I sell a program on the business credit side that I assist you in personally. And then I have a gal that works with me. Her name is Jill. She's a certified business credit analyst, because business credit is kind of like a sticky wicket.
Okay.
If you've changed names, if you've changed addresses, if you've not updated all that information, if you're using your cell phone and you don't have a business registered phone number, if you don't have a website, there's those 120 things that impact whether the lenders for true business credit products see you as low risk and, hey, this person's really going to stay in business. They have all these 120 things in place and they're really like set up like a business who's gathered all those things over the course of 20 years of being in business. So we show you how to do your entire fundability foundation is what I call it. And that's those 120 things that you have to have in place. And then we start signing you up for products, which you will all of a sudden start getting approved for because you have the right, foundation in place for them. And then how you use it and pay it starts to build the score. And then you're graduated product wise. There's 4 different tiers of business credit products. And it starts out with like anywhere from like a net 10 to a net 30, which means the balance has to be paid in full within 10 to 30 days. Mm-hmm. And then it graduates to products like that American Express corporate card, where you're using it just like a regular, personal credit card, but it's strictly for the business. And I've had clients who have used that credit card to start an entire other business because they utilize the card to carry all the debt load and move forward. And it's great.
Okay.
You can also sell your business. Once you have business credit, you have the option now to sell your real estate team as a stock sale. You can sell it to somebody else who can take it over and have full business credit built on it. And it's a stock sale, because the reality is most real estate, brokers and or agents, you don't have more than, your office supplies. You may have some real estate, you may not. But once you have business credit, you can now do a stock sale because there's value to the business outside of just the physical assets that you have.
Okay. Thank you.
Yeah, you're welcome.
How many of you are thinking of different ways that you could and should maybe utilize business credit? I mean, I know a lot of people are looking at investing in real estate. Many people are looking at building a business, building a team. Maybe my husband and I just developed land, and that took a lot of capital. I wish I would have had better, business credit to do that. And we still managed through it, but it would have been more ideal. So now I'm looking at this for future opportunities. Why are we not separating those two things? And I think real estate professionals, I know many who have teams who do a lot of investments who do not do it on the credit side. It's just not something that many of us have learned about or have talked about. So we're really leveraging everything personal, and it does affect a lot of things. There's times when people need credit, personal credit for, just different things with their kids, even college tuition. And then you're just intermixing all your business with your personal, and it creates some challenges. And now we know that we can separate these things, but it sounds like it's a process. So there's no, I assume that if somebody wanted to get into just personal investments, let's just say, and I'm going down that path because many people on this call, we've talked about this, and I know people watching have too. Just from a caveat perspective, Brittany, I want to make sure you would probably want to start a separate entity just for the investments, and then start building the credit for that particular business entity, correct?
Yes. Yeah. So I advise my clients to kind of go big or go home. You really want to start out with at minimum, like an S Corp. So you'd file as an LLC. You would then file additional paperwork through your accountant to become an S Corp with the anticipation that you'll take in over $80,000 a year, and you don't want to get harmed on taxes. And then that can be your umbrella company, and you can DBA underneath of it for a couple different things. You could have a remodel business with the rentals business, and then build all of your business credit on that overarching company and its EIN.
Perfect.
Yes.
Yep. Perfect. And that makes sense. So some of you already have businesses like I do, business entities that we get paid to. Yes. We could DBA underneath of those. We could take the credit being the overarching company, and then we could have different sectors that might make more sense for some of us that have different businesses that we run.
Absolutely. Keep your Airbnbs separate from your long-term rentals, separate from your, corporate commercial rentals. Okay. I can guide a lot on that. I have a very specific service that I provide where I will show you how to set up a business to start the new business, which I've done with Tiffany. So to start your business so that it's set up from the get-go appropriately for business credit, because as soon as you go in to get your business bank account, a lot of business credit lenders see your start date as the day that you opened your business bank account. So if you've been running your real estate business off of your personal bank account, just putting your checks in there, you're doing yourself a disservice, because even if you've registered, or you have your PA or whatever, if you didn't start a true business bank account, you haven't really started in the eyes of a lot of those business lenders. And then to the other piece to that, when you go start a bank, your business bank account, they're going to be chatting with you, and they're going to say, "Hey, Carrie, so what is it that you do?" And you're going to say, "Well, I really want to get into Airbnbs or something." And they are literally going to type in, they're going to go to their Google search while they're chatting with you. They're going to type in Airbnb NACE code. And your NACE code is your identifier. It's kind of like the ethnicity of your business, let's call it that, right? It's the ethnicity of your business as to what the federal government decides. So they'll type in Airbnb NACE code, and it's going to generate some little code, and then they're going to put that in with your business bank account as your NACE code. And the federal government is now going to forever see you as exactly that type of business. And it comes with a small generated business credit score of good risk or bad risk, okay, automatically. So what I have my clients do is create that overarching company, and you're going to be a management consultant, because it's a very low risk business where they typically make a lot of money and they handle their money very well. And the federal government sees them as low risk financially. And then you can have all your other little businesses underneath that for whatever those are.
So what would you call the overarching business?
a
Is there-
management consultant, because you are a
Oh.
manager. You're genuinely managing each of those little DBAs, and you are, you know, guiding their growth and development and all that stuff. So it's not a falsehood by any means. It's the truth. It's just a way to, you know, it's a way to work the system the way it's meant to be worked, if that makes sense.
Okay.
Yeah.
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 Interesting.
Yeah.
Yeah,
So
I get. Yeah.
I had a client who was getting harmed within the real estate industry because they did not have a Google business page. That's one of those 120 points. And so many of you might be like, do I have a Google business page? So you have to go in and inside of your Gmail account or whatever, or going to Google, and you can click on business pages and you have to create one. And it has to match the exact same address, name, everything, phone number as your Secretary of State will see your business as. And that gets picked up by a lot of other search engines, which helps to make you start to look like a low risk, well-established business, right? And you have to do that for yourself. I had another client who was completely not generating scores because they did not have a website for their business. And that sounds like, well, why do I have to have a website? Well, you do have to, and it has to be registered to your business as the owner, because that piece is very important too. And that tells lenders, hey, they're established. There's a website that we can go to. You know, we can find these people if they default on their payments with us. That's really what all business credit is how high risk or low risk do you look to them for lending? And Joe Handyman, who uses his cell phone and has a Gmail account and doesn't have an @ my website address and doesn't have a website and just has his business card, is super high risk to any lenders, because they are like, Joe Handyman, you could just, you know, drop off the face of the earth tomorrow and we couldn't find you anywhere, right? There's no way to track you or where you've gone or anything, and you're not very well established, so you look super high risk to us, kind of like, you know, like he's like a wanderer or something.
So would the website and the Google page be to your management consultant?
So that's part of that software access that I give all of my clients. All 120 of those pieces are in there. And we make sure you have every single last bit of all 120 of those. So along the way, I've had to build very budget friendly options, and I've negotiated a lot of rates with a lot of different vendors. Like I have a really great negotiated rate with Verizon Business for my clients who need to get a business registered phone. So they get a better rate than somebody else coming in off the street. I have a website where you can get a 4-page website for $500, and it's like phenomenally done. And it's a full-fledged website with everything you'd need, and that's all you need for business credit purposes. And then, yeah, there's things like your Google business page and all kinds of stuff like that.
Awesome.
Very
All
good.
right. Well, I think that we need to get going because we are at our time. This is amazing. Can we put all the contact information? I don't know, Haley, if you've done that in the chat yet, or if not, Brittany, can you chat in the chat box so people can grab your information? That would be amazing.
Yes.
Because I believe we're probably going to have people that want to connect. It looks like we've got your email here. Thank you, Tiffany. I just saw that. Is that the best way for people to set up a call or a time with you? Is your email?
Not so much, because I spend so much time actually like in person with clients that really I prefer people call me, old-fashioned call or text me, or both, either of those.
Okay.
Yeah.
Perfect.
Yeah.
Awesome. All right. We're going to put this in the live chat so people have it in the live stream that's saved, so anybody can reach out to you. Hopefully you'll get lots of calls. You brought really great information. You got me thinking about things. My husband's probably going to reach out to you. And I really appreciate you. And thanks, Tiffany, for making this happen.
Thank
and Haley
you.
as well. Thanks, you
Thank
guys.
you.
Okay, bye, guys. Thank you, Haley.
Bye.
Bye. Nice meeting you all. Dogs.